Subprime lender PrimaLend collapses. Could this be 2008 all over again? A major warning sign just flashed in the U.S. credit market. On October 22, 2025, PrimaLend Capital Partners, a Texas-based lender that finances auto dealerships serving subprime borrowers, officially filed for Chapter 11 bankruptcy in the U.S. Bankruptcy Court for the Northern District of Texas. The filing came after the company missed interest payments on a $75 million bond and failed to reach a deal with creditors. Court documents show PrimaLend listed assets and liabilities, each between $100 million and $500 million. PrimaLend's collapse is sending ripples through the subprime auto lending world, a market already under strain from rising defaults and tighter credit conditions. Analysts say the company's business model depended on high-risk borrowers and aggressive lending to smaller car dealers. When delinquencies began rising and funding costs increased, the math stopped working. While the filing is a blow to investors, it has also sparked fears of something bigger. Could this be the start of another financial crisis like 2008? After all, the pattern feels familiar. Risky loans, structured debt, and sudden collapses among specialized lenders. But economists caution that today's situation, while serious, is far smaller in scale. During the 2008 meltdown, the U.S. mortgage market carried over $1.3 trillion in subprime debt. When those loans began to fail, they dragged down $8 to $10 trillion in mortgage-backed securities and ultimately erased more than $50 trillion in global wealth. By comparison, PrimaLend's bankruptcy involves only a few $100 million, significant for its investors, but nowhere near system-shaking territory. Still, some experts see PrimaLend's fall as a warning sign. Subprime auto lending has grown rapidly in recent years, fueled by consumer demand and high interest rates that made credit more profitable but also riskier. If defaults continue to climb, other lenders with similar exposure could face the same fate. Reuters recently reported that Wall Street is already reviewing credit exposures tied to small auto finance companies after several mid-tier firms stumbled this year. The concern is that these losses, while modest on their own, could pile up and tighten the flow of credit for everyday consumers. So no, this isn't another 2008, at least not yet, but it is a reminder of how quickly cracks in high-risk lending can spread when markets get stressed. For now, PrimaLend's downfall stands as a cautionary tale in an economy still walking a fine line between resilience and risk. Disclaimer: this report is for informational and educational purposes only. All details are based on publicly available, verified news sources as of